The following is a presentation of TFNN.
Next up, we're going to go to Florida, Titusville. Nick, thanks for hanging on the line. How you doing today?
Hi, yourself, sir?
I'm doing well.
Ken, I want to say I'm 84 years old, and the way you explain things makes it very easy to follow.
That's very nice of you to say, Nick. I appreciate that very much.
Have a good day, sir.
All right, you too.
Live at TFNN, Breakout Investing, with your host, Ken Shreve.
Welcome, friends, to another edition of Breakout Investing on TFNN. Now 5 days a week from 3 to 4 Eastern. Ken Shreve with you. First time I'm hosting Breakout Investing when the market is closed. And in fact, the New York Stock Exchange and NASDAQ will be closed tomorrow as well. The last time that's happened, 2 straight days where the exchanges have been closed, have to go all the way back to 1888, I believe. So no trading today. No trading tomorrow. Gold and oil did trade today, so taking a look at gold for December delivery, it lost $3.20. 0.2% settled at $1,708.70 an ounce, and there was an electronic session for oil as well. It settled at 85.54, down 74 cents. I was off Friday, taking a look at what the Dow did on Friday. Here's a look at the Dow Jones Industrial Average. Again, you can look at charts live right along with me in Tiger TV, right on the homepage of TFNN.com. Channel 1, the show is carried live, and it is archived on Channel 13. But the Dow on Friday ended up 3.5 points to 13,107. Friday marked the second day of a rally attempt for the blue chip index. Friday for the NASDAQ composite marked day one of a rally attempt. So let's just go ahead and take a look at the NASDAQ composite, see what it did Friday. Trying like heck to hold on to its 200-day simple moving average here. And again, the NASDAQ hit an intraday low on Friday that undercut the prior lows here. It did end higher, so that's day one of a rally attempt for the NASDAQ composite. But still technically troubled, I think, is the best way to describe the tech index at this point. It's really do or die time, isn't it? It's either going to hold support at this 200-day moving average, or it's not. And if it doesn't, well then, you'd have to look at recent lows in the NASDAQ composite, 2850, 2900. Maybe that's the next support level for the tech index. But no trading today. Everybody obviously following Hurricane Sandy. The eye of the slow-moving storm is expected to hit the southern New Jersey shore Monday night. Seeing headlines that New York is bracing for the possibility of 11-foot tidal surge. So far, 300,000 customers in New England without power. Norfolk Southern today, that's ticker NSC, rail operator. They said to expect rail delays of at least 72 hours from Virginia through New England due to Hurricane Sandy. So this is an unprecedented storm, sort of a perfect storm, if you will. I hope all my friends on the East Coast and mid-Atlantic states be safe, and we'll hope this storm gets out of there quickly. But looks like it's going to be a big one. Right now, the NASDAQ composite, when just taking a look at the major averages here again, the selling in the market feels like it's been pretty intense, but right now the NASDAQ composite is only about 6.5% off its recent high of 3197. So we're not even at that 10% threshold, which many would call an intermediate term market correction. Of course, a full-blown market correction would take us down, about 20% off of a recent high, but we're nowhere near that. And again, whether or not the NASDAQ composite is going to be able to hold its 200-day moving average here remains to be seen. We're more than halfway through our earnings season. It has not been the best of earnings seasons for sure. There were some bright spots last week, but we will hear more earnings reports this week, depending on when the market opens up again. And hopefully we'll see good news in terms of tech earnings going forward. But we've made it through the brunt. I mean, this week is going to be very busy, and then it'll start to trail off starting next week. Headed into Friday last week, what was interesting is that we're still seeing a lot of distribution in the market, and you're hearing the term oversold a lot, and that the markets are due for an oversold bounce. Well, that may be true, but the market is not flashing any signs yet that it's going to bounce. So it remains a very risky environment out there. Through Friday of last week, the NASDAQ composite showed 4 higher volume declines in the past 7 trading sessions. Anytime the NASDAQ, or any index for that matter, falls and volume picks up from the prior session, that is mild distribution, and it's a sign of sometimes mild institutional selling, sometimes it's more significant. The percentage decline is big and the volume is big right along with it, and that's significant distribution. But that's what we're dealing with right now, a market under distribution. And one of the strategies that I use for my Ultimate Growth Stocks newsletter and model portfolio is to swim with the market tide as much as possible. I am not a believer at all in trying to make money in stocks when the market trend is downward. What I know right now for a fact is that the market trend is downward, which is why I've been raising cash, taking profits, cutting losses short where necessary, but trying to make money in stocks during a downtrending market is a fool's game. So I prefer to sit in cash, get out of the market's way, wait for a buy signal when it comes. And again, if you subscribe to Ultimate Growth Stocks, or even if you'd like to get a 30-day free trial, see how I cover the market, I will be writing about buy signals when I see them, and subscribers to Ultimate Growth Stocks will know when I'm starting to venture back into the market. But right now the risk still clearly outweighs the reward. If you want to check out 30 days free of Ultimate Growth Stocks, you can do that right on the homepage of tfnn.com. You can click on the newsletters tab right along the top of the homepage, then click on investment newsletters. Also in the breaking news area on the website, in red letters there, it says try out Ultimate Growth Stocks. So you can try 30 days free and check it out. The Great Panther Silver Halloween giveaway at TFNN was supposed to start today, October 29th, 30th, and ending on Halloween Day, October 31st. But with the market being closed today and tomorrow, it's going to be pushed back. Right now, I suspect it's going to start on Wednesday, but even that hasn't been confirmed. So keep listening to TFNN, and we'll the first day the market opens, which hopefully will be Wednesday, that will be the start of the Great Panther Silver Halloween giveaway. You can register right on the homepage of tfnn.com, and the silver is going to happen every hour that TFNN is on the air live from 9 a.m. to 6 p.m. Eastern. And the first 2 days, I should say, we're going to give away a half ounce of silver to a lucky listener every hour, again, from 9 a.m. to 6 p.m. Eastern. And then on the third day, which originally was going to be Halloween Day on the 31st, we're going to give away a full ounce silver piece, of 1 ounce silver piece from 9 a.m. to 6 p.m. Eastern. So be sure to check that out. Register right on the homepage of tfnn.com. We did have some economic data that came out earlier today. Personal income up 0.4%. That was in line with expectations. Spending, not too bad, up 0.8%. That was a little better than the consensus estimate of a gain of 0.6%. Remains to be seen what the economic data, how it's all going to work. I mean, there were some rumblings that the jobs report this Friday was going to be rejiggered. They were going to maybe change the release date of that employment report for October. But the way it stands now is that tomorrow we should get the latest reading on consumer confidence from the Conference Board. Its consumer confidence index is expected to register a reading of 72.5, up slightly from 70.3 in September. Remember, September's reading was well ahead of the consensus estimate of 63. On Wednesday, the ADP employment change expected to show private payroll growth of 140,000, and the Chicago Purchasing Managers Index also out Wednesday. October is expected to come in at 50.9. That is expansion mode from 49.7 in September. On Thursday, challenger job cuts, weekly jobless claims. We're going to get another key piece of manufacturing data, the ISM Manufacturing Index. That's expected to come in at 51, also in expansion mode, down slightly from 51.5 in September. And then the granddaddy of them all, the jobs report. On Friday, non-farm payrolls seen rising 125,000 from 114,000 job growth in September, and factory orders also due on Friday. So that's the way the current economic calendar looks, and we'll see how the calendar is affected due to Hurricane Sandy. Take a look at news from eBay today. Shares of eBay, again, this is a close Friday. Stock continuing to show relative price strength. On Friday, it outperformed nicely, up 2.4% to 49.51. Nice bounce off the 50-day moving average for eBay. The company earlier today said that it plans to cut 325 jobs at its PayPal online payments business. Most of the job cuts are going to be from PayPal's product and technology businesses. There was also a little acquisition earlier today, Clean Harbors, CLHB. I think that's the ticker symbol, CLHB. Nope, that's not it. Bear with me here. CLH is the ticker for Clean Harbors. And you can see this is a stock that is in quite the downtrend, not looking all that healthy. It closed Friday at 49.44, but earlier today the company is going to pay $1.25 billion in cash to buy oil recycling firm Safety Clean. The deal is expected to close by the end of the year. Clean Harbors said it expects the deal to be immediately accretive to earnings. Did have some earnings reports. Again, it's supposed to be a busy week of earnings. We'll see how the calendar is affected. There's some high-profile reports that were supposed to come out after the close today. I assume they're going to, but it's just hard to say as Wall Street kind of scrambles with this storm. But earlier today, Burger King worldwide, that's BKW. Stock is through Friday was working on a 5-session winning streak, working on a little breakout here over $15 a share. It closed Friday at $14.95. The numbers weren't great at Burger King. Earnings up 6% to 17 cents a share. Sales down 26% from a year ago to $451.1 million. So when the market does open, hopefully by Wednesday, we'll see how investors respond to Burger King's earnings. And we also heard from earnings today from CVLT, Commvault Systems, CVLT. This stock is underneath its 50-day moving average. It closed Friday at 53.47, up 6 cents. Commvault is a data storage and security systems provider. Earnings up 58% from a year ago to 38 cents a share. Sales up 21% to $118.2 million. Company also expanded its stock repurchase plan by $50 million. So decent numbers from CVLT. Stick with me, folks. We'll be right back.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC.
Millionaires are made every day. The fact is, living your dreams is possible. Someone, somewhere is going to get rich. My recommendation is, let that be you. Each day, someone is making the decision to better themselves and creating a plan to fulfill their financial dreams. Let that be you. The key to turning dreams into reality is to take massive action. Let that be you. I'm Steve Rhodes, co-host of the Money Master Show with Tom O'Brien, seen daily at TFNN, and I can help you with your journey to great wealth. I'll show you how to create the ultimate financial edge, a set of tools, insights, and strategies that are part of my daily newsletter service, Mastering Probability. You'll have direct access to me by phone, email, and my private library of trading and investing secrets for 30 days with an unconditional money-back guarantee. I'll take your trading to the next level. Click on my name, Steve Rhodes, on the homepage at TFNN.com and turn your dreams into reality. Mastering Probability, folks. Let that be you.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
Welcome back, everyone, to Breakout Investing on TFNN. Ken Shreve with you. You know, I didn't mention at the top of the program, like I always do, if you can't listen to my show live, it is available in a lot of different areas as a podcast. You can head over to iTunes and download it there. And there are other apps for the iPhone that you can listen to podcasts, and you can access it there as well. So you can also listen to all TFNN programming on your smartphone. If you're not in your car, you're out for a walk, out for a run, doing whatever you're doing, you can plug your earbuds in, type in tfnn.mobi in your smartphone browser, and you can listen to the stream that way as well. Another stock in the news after a big move late last week. Let's check in on shares of Gardner Denver. You can see what the stock did last Thursday, an enormous move for the stock. It extended gains Friday, up another 1.7% to 67.15. Gardner Denver is a maker of industrial pumps and compressors. They did have earnings before the open today. Not all that great. They did beat earnings expectations with profit of $1.32 a share. That was down 11% from a year ago. Sales were a bit light. They came in at $548.5 million, also down 11% from a year ago, and a little bit below the consensus estimate of $560 million. Shares soared late last week, again on Thursday, after the company said it was considering putting itself up for sale. Apparently there are some private equity firms interested. Also in earnings today, Gardner Denver did raise its full-year guidance to a range of 547 to 557. That's a little bit above the consensus estimate of 537. Since I was out Friday, I didn't get a chance to comment on Apple. Take a look at a chart of Apple here, and we'll see a stock that clearly is vulnerable, similar to the NASDAQ composite. Apple trading just above a long-term support level here. It's 200-day simple moving average. That support level is at $586. And Apple closed Friday at $604, so it is about, $18 above its 200-day moving average. Earnings from Apple on Thursday after the close, kind of a lukewarm report, if you ask me. The earnings of $867 were slightly below the consensus estimate of $881. Earnings were up 23% from a year ago. Sales were up 27% to $36 billion. That was mostly in line. They gave conservative holiday guidance. Not surprising. They are looking. They forecast earnings of $11.75 a share, sales of $52 billion. The consensus estimate right now is looking for $15.41 a share and about $3 billion more in sales to $55 billion. So very conservative holiday guidance. I just, I'm not keen on the stock here. Listen, I'm in right now, kind of assembling watch lists and of stocks that I believe have the potential to be emerging leaders. I'm going to be writing my weekly update. I've already started it. Going to be spending more time on it today, tomorrow morning. I'll be sending that out to subscribers on Tuesday. But with every weekly update I do, I always have a watch list of stocks that are showing good technical action that I'm paying attention to. And a lot of people stop actually paying attention when a market is in a distribution phase like it is now. And this is really the time where we're starting to see bases take shape. And some of these bases are gonna round out the bottom, and some stocks are going to retest their former highs, and before you know it, you're going to get heavy volume technical breakouts when new money starts to come in from the sidelines. I'm still optimistic that it could happen between now and the end of the year. I think once the election passes and some uncertainty disappears from the market, I have not given up yet on a nice little year-end rally here. I am troubled by the action in Apple and Amazon and some of these big market leaders. There's a lot of distribution out there, which is troubling, but doesn't mean that the market can't follow through sooner rather than later. And if it does, that's a time to start nibbling. It's not a time to, if you're sitting in a big cash position, just to put all that money back to work. But if you get a buy signal, you get some confirmation by the major averages in coming days and weeks, it's okay to pick up 2 or 3 stocks and see how they work, because if it's a buy signal that means something, and it's a buy signal with that conveys power and conviction, sometimes they can fuel some pretty bullish breakouts. So when we come back, I also want to take a look at Amazon, because their earnings report was not that good on Thursday, but boy, the stock had a big day on Friday. So we'll take a look at Amazon when we come back, and lots of other good stuff coming up next. You're listening to Breakout Investing on TFNN. We'll be right back.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, the Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. TFNN and Great Panther Silver have teamed up for another exciting silver giveaway. The Great Panther Silver Halloween giveaway will be taking place at the end of October, and for 3 full days, we'll be giving away silver coins and bars every hour from 9 a.m. till 6 p.m. to one lucky winner randomly chosen. There's no purchase necessary. For more information and to fill out your registration form today, simply visit the front page of TFNN.com where you'll find all the details. October 29th, 30th, and 31st, we'll choose one lucky winner that will receive a silver coin or bar courtesy of Great Panther Silver. Winners will be announced live on the air each hour for 3 full days. Don't miss out on this great opportunity to win free silver from TFNN and Great Panther Silver. Register today by visiting the front page of TFNN.com. And for more information on Great Panther Silver, you can click on their banner on the front page of TFNN.com or check them out on the NYSE Amex, symbol GPL, or on the Toronto Stock Exchange, symbol GPR.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
This segment is brought to you by Direction Shares. To learn more about tactical tools for the sophisticated active investor, hit the Direction Shares banner on the front page of TFNN.com.
Welcome back, everyone, to Breakout Investing on TFNN. A couple of other thoughts on Apple here. The numbers on Thursday, they were okay. They weren't special. I just think that there used to be a time not that long ago, past few quarters, where Apple would come out with earnings, and boy, the numbers would just be so far ahead of what the consensus earnings estimate was and what the sales estimate was, and I'm just not so sure the company is going to be able to do that. I think the results on Thursday marked the second quarter in a row where they missed the consensus earnings estimate, and I just think the risk outweighs the reward in the stock here. You have to remember, I've mentioned it before, but since the start of the bull market in March 2009, you're talking about a stock that's up almost 600%. So there comes a point where the big money has already been made in a stock, and that may or may not be the case with Apple, but I just think that when new buyers start to come into the market, I think there's going to be better opportunities for outperformance elsewhere. That's the bottom line, and it means that's why I'm going to be looking in other areas for potential leadership. I'm not interested in stocks that are up 600% over the past 3 years. I'm interested in newer companies, newer issues that are still in the early stages of price moves. All right, so that is it on Apple. Let's take a look at Amazon. Talk about a lukewarm quarter. The consensus estimate on last week on Thursday was for Amazon to lose 8 cents a share. They lost 23 cents a share. Sales came in a bit light, still up 27% from a year ago to $13.8 billion. The consensus estimate was 13.9, so not a big miss there, but still slightly underneath expectations. Their outlook for the fourth quarter was lukewarm at best. What do shares do on news like that? Well, they're up 6.9% on Friday. Talk about a counterintuitive move for Amazon. Big move for the stock Friday, but this is still a broken stock. Didn't quite get down to its 200-day moving average around 217, but this 50-day moving average at 249 could be a resistance level at not. So both Amazon and Apple could go on to form new bases here. When a stock forms a base, it corrects down the left side. It starts forming the right side. If the formation of the right side of the base is fueled by institutional buying, in other words, you see some above-average volume price gains, Amazon certainly showed one on Friday, but whether that's going to be enough for the stock to continue a move towards a recent high of 260, that remains to be seen. So Amazon still very, very questionable, very iffy in terms of its technical picture. One name that I do like here is chip designer ARM Holdings. This is a completely different company. ARM's technology, its chip technology is in the iPhone, it is in the iPad, and the stock last week had a big gap up in price after the UK-based firm reported earnings of 18 cents a share, up 29% from a year ago. Sales growth solid, up 24% to $233.5 million. The company licenses its microprocessor designs to a whole bunch of different companies, including Apple, and ARM has a big presence in the smartphone and tablet device market. So while you have a semiconductor industry that overall is struggling big time, shall we say, whether it's Intel, Texas Instruments, Advanced Micro Devices, there are a lot of chip makers out there that still have too much exposure to the PC market. Of course, the PC market is in shambles. Demand continues to suffer for PCs as consumers move more and more towards tablet computers. But there are some chip companies out there that are well positioned and not reliant on PC growth to fuel earnings. And I think ARM is probably the best example. There's another chip maker out there, Cirrus Logic, which continues to show relative price strength, kind of questionable action over the past several weeks at its 50-day moving average. You can see Cirrus Logic started to correct in price in late August, early September, came down to its 50-day moving average, broke underneath it, and now it's kind of having a hard time here getting back above it. So this is another chart that looks a little bit questionable here. The other thing I'm a little wary on Cirrus because of the amount of exposure it has to Apple. I think something like 70%, 75% of its revenue comes from Apple. And anytime a company is so reliant on one customer for business, it is it makes me a little bit nervous. But that said, Cirrus Logic does have very bright growth prospects ahead of it, and don't have an earnings date for them. Oh, you know what? Silly me. Cirrus is supposed to come out with earnings after the close today. And look at these estimates here. Profit of 71 cents a share. That would be up 115% from a year ago. Sales of 180.8 million. That would be up 78% from a year ago. So this company's chips, clearly doing well because of the success of the iPad and the iPhone. But again, we'll see if Cirrus sticks with its schedule. It is supposed to report after the close today, and it's another chip maker out there with very positive qualities. But chip makers with strong fundamentals are really the exception, not the rule up there. So if you're looking in the big semiconductor group, you really want to focus on the companies that at least are showing consistent earnings and sales growth in recent quarters, and the problem is finding those consistently showing relative price strength, because ARM, in my view, is the standout in the group right now. Cirrus, pretty solid fundamentals, but recent price and volume trends in its chart leave a lot to be desired, in my opinion. Last week we had very solid earnings from 3D Systems. These 3D printers and prototyping makers have been in the news due to strong fundamentals. 3D Systems is in the process of building a new base here. You can see it's forming the right side. It's getting pretty close to its recent high of $45 a share. It closed Friday at $42.67, and they had a very strong quarter. 32 cents a share was 5 cents above the consensus estimate. That was up 78% from a year ago. Sales were up 57% to just over 90 million. That was also above the consensus estimate, and it'll be interesting to see what Stratasys, this is in a very similar business to 3D Systems. Stratasys also makes 3D printers. They also do prototyping systems. Another good example here of a right side of a base being built here. You can see a correction from 72 down to about 55. It closed Friday at 68. So this one is starting to retest that prior high set back in August, and Stratasys earnings come out November 2nd. So that is this week. The consensus estimate calls for a profit of 37 cents a share. That would be up 37% from a year ago. And let me pull up a weekly chart here so you can see a different perspective. Yeah, nice base breakout right here, forming a new base. And so this is a nice base taking shape. When you're talking about looking for stocks that have the potential to be market leaders, this is a technology. This 3D printing and prototyping is still in really the nascent areas of growth. So 3D Systems, Stratasys, definitely worth watching here because they do have potential, in my view, to be market leaders because fundamentals are so solid. So when they report on November 2nd, again, profit expected to be up 37% from a year ago, sales up 23% to just under 50 million. So Stratasys looks interesting here. And I want to take a look at Regeneron Pharmaceuticals. This used to be a holding in my Ultimate Growth Stocks model portfolio. It was a profitable position, and actually last week I decided to take profits. I decided to take a gain in the stock because it reported earnings on, it was a Tuesday or Wednesday, or last week Tuesday or Wednesday it reported earnings, and I took profits ahead of the report. I just wasn't really feeling that good about overall broad market health, and owning a high growth like name like this ahead of earnings, you always run the risk of giving back a significant profit if earnings are just okay, or I just felt the risk outweighed the reward holding shares ahead of earnings. So I took profits. I was very disappointed when the stock popped 6.3% after it reported earnings. I said, well, maybe I sold too early. But I never, when I make a decision to sell a stock, I never look back. I never look back because I always make, I tell this when I write alerts and I communicate with subscribers to Ultimate Growth Stocks. Any decision to buy, any decision to sell is based on information available at that time. So if I decide to buy a stock, add it to the market Ultimate Growth Stocks model portfolio, it is a thought out decision. I feel like the odds are in our favor for making money. When it comes time to sell, I believe that the risk outweighs the reward, and it's just again, based on available information at the time. So when I decided to sell Regeneron last week, again, I just felt like the risk outweighed the reward. Better take a profit than run the risk of, giving back profits. So Regeneron popped 6.3% on Wednesday. And then on Thursday and Friday, it lost a combined 8.3%. So all of a sudden, that sell that wasn't looking that good, I feel a lot better about it now, because you can see Regeneron on Friday, it did fall below its 50-day moving average here. So this is another stock that is looking vulnerable. Anytime a stock gives up a short-term support level like this, certainly Regeneron could try to test its recent low here around 142. Its 200-day moving average is all the way down around 126. So I felt good about selling Regeneron at the time, and looking at its price action on Thursday or Friday, I feel better about that decision. So, right now with the Ultimate Growth Stocks model portfolio, I do not have a lot of exposure to the market, and I am completely happy with that. When you're in a volatile market situation, it is and the market tide flowing as negative as it is, it just doesn't make sense to try to make money in a downtrending market. People say, well, you can short an index ETF, maybe the SDS for the S&P 500, the QID for the Nasdaq 100, and that's perfectly fine. But when we're in the early stages of a rally attempt and follow through could be seen at any day, I think the cash is fine right now. I have 2 open positions in the model portfolio currently, and again, if I start to see signs that money is coming in from the sidelines, uncertainty starts to fade away from the market, I am certainly not averse to looking for some new buy candidates. But for now, without an edge, I'm content just to watch and keep my watch list fresh, and we'll go from there. When it comes to the strategy for Ultimate Growth Stocks, I use a combination of fundamental and technical analysis. Okay, my strategy is often referred to as a momentum style, and I always tell people, you know what? I do like momentum. I like price momentum. I like to target strong price performers in an industry group. I don't like to target laggard, sluggish price performers whose fundamentals are deteriorating quarter after quarter. So price momentum is important to me. I like to buy stocks that are showing price strength in the market. That is, usually indicative of a company that's being bought by institutions, for example. Stocks going up, by and large, have generally better qualities than stocks that are going down. Caterpillar's been going down. Advanced Microsystems has been going down. Intel's been going down. Why have they been going down? They've been going down because fundamentals are very much in question at these companies. The names that I target for Ultimate Growth Stocks that are going up in price, the reason they're going up is because their fundamentals are much less cloudy. They have an outstanding track record of execution. Their return on equity is high. They've got a management team that is executing a growth strategy. You're looking at bottom line and top line growth of 25, 30, 50% quarter after quarter. So yes, price performance is important to me, and institutional sponsorship is also important. I will own stocks from time to time that are large cap names where 1,000, 1,200, 1,500 funds may have a position in the stock, but there comes a point where a stock gets over-owned. And over-owned means that there are just so many mutual funds in it already, it just becomes harder and harder to move the price due to all of the supply out there. So a 50,000 share buy, a 50,000 share sell, it doesn't really have that much impact on the price. So institutional sponsorship is important, but I want to buy stocks in the early stages of a move when they're just getting started to be discovered by fund managers. That's important as well. Taking a look at some earnings reports after the close here as we head into the final break. Let's check in on Baidu. Baidu has been under a lot of pressure. They report after the close. We'll go over Baidu's numbers because this company continues to grow rapidly. Why is the stock such a mess technically? We'll talk about Baidu when we come back. They're scheduled to report after the close. We'll do that in about 4 minutes. You're listening to Breakout Investing on TFNN. We'll be right back, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You've heard Tom O'Brien on the air, and you've seen him on Tiger TV as well as being featured as a regular CNBC guest and contributor, and now you can have access to his expert trading advice each morning through his daily trading newsletter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, gives traders, investors, and money managers a thorough strategy for trading stocks, options, and indices every market day. Market Insights comes out each market day before 9:30 a.m. and provides traders with Tom's daily commentary, opinion, and specific trade recommendations on the markets. Using advanced Fibonacci methods, volume indicators, Gartley patterns, candlestick charting, gaps, and market timing, Market Insights will give you specific trade recommendations including entry, stop, and exit prices. The summer is over and traders are back. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to check out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday, Wednesday, and Friday, 11 a.m. Eastern, on TFNN. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Catch Tom O'Brien, founder and CEO of TFNN, professional trader and educator. Also a special guest on CNBC, analyzing the commodity markets. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
Welcome back, everyone, to Breakout Investing on TFNN. Looks like Atlantic City getting hit pretty hard right now by Category 1 Hurricane Sandy. I hope all of you on the East Coast, Middle Atlantic states be safe over the next 24 to 48 hours. The stock market will be closed tomorrow as well, so no trading Tuesday. I will be back with another edition of Breakout Investing tomorrow. And I think for tomorrow's show, what I'll do is kind of go over my portfolio strategy, talk about some common investing pitfalls to avoid, things I I refuse to do with the model portfolio. But in this market environment, it's really not about it's about capital preservation at this point. I think that's the most important thing. I have a pretty heavy cash position in the model portfolio, so if the market goes down, I'm protected. And if the market again starts to show signs that it wants to head higher, maybe it happens after the election is resolved and we know who the president is going to be, that layer of uncertainty gets removed, then we may get a buy signal. And if we do, I will have a watch list of stocks ready, and I will put money to work, and we'll see how it goes. But my next weekly update for Ultimate Growth Stocks will be out tomorrow morning. It comes out every Tuesday, an extensive weekly update, and then I send out email buy and sell alerts in between, either buy alerts, sell alerts, market updates, and just stay in communication with subscribers. So taking a look at Baidu again, earnings after the close today, I assume they're going to stay on that schedule. I suppose it's not a sure thing, but I expect to hear from Baidu after the close, and another strong quarter of growth is expected, with earnings up 52% from a year ago to $1.28 a share, sales up 53% to $1 billion. This is technically a weak stock. It is a bearish chart. You can see Baidu corrected sharply from a high of around $132, $133 a share in August. It is now trading at $113.84. That was Friday's close. But you can see once it broke below its 50-day moving average, it's been living underneath the line. And just recently it's been trying to get back above it 5 or 6 separate times, and it's failed every time. So this looks like a very tired stock to me, and it's a chart that tells me that the chances for more downside from here probably outweigh the chances for more upside. So Baidu looking very, very vulnerable ahead of earnings. And then we also mentioned Cirrus Logic coming out after the close, and Yamana Gold, AUY. We should hear from them after the close. There's Yamana Gold. And here, old name still showing relative price strength, technically healthy, holding above support. Trading above its 50-day moving average here. Yamana Gold earnings after the close. And then tomorrow, take a look at some interesting tech names. Allot Communications is an Israeli networking firm, small cap company here. Pretty good fundamentals, but look at the chart. The chart is really a mess here. It broke below its 50-day moving average in September, was never able to reclaim the line, and Friday it plunged 4.3% to 22.78 and closed below its 200-day moving average. So a lot of bad news priced in quickly here. Perhaps it's supposed to be a decent quarter. Earnings of 14 cents a share, up 8% from a year ago. Sales up 39% from a year ago to 27.8 million. Before the open, we're also going to hear from GNC tomorrow. GNC Holdings, a retailer, vitamin retailer, things like that. Another shaky stock here technically. Boy, that's really the case here. Seeing a lot of charts that just don't look that hot right now. So with so many bad charts out there, wait for the setups, folks. Wait for the setups. They'll come, and when they're out there, the market's going to be telling you, buy, buy, buy. We're not there yet, but we could be sooner than you think. Coming up next, the Tom O'Brien Show, folks. I'll see you back here tomorrow, 3 o'clock Eastern. Have a great afternoon.